Good morning, Mike and Corey here on October 15th. Hopefully continuing this green week as we come into presidential elections. Today's topic, we're going to talk about United Healthcare earnings and the cost of medical services and what the government reimburses. Going to talk a little comparison of what was in the S&P 500 10 years ago in the percentage compared to today. And then Corey's going to dive into oil prices going down. Is that good? Is that bad? If you got a car that uses gasoline, it's good. That means it's less expensive. But before we get started, must remind you, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I want to start off, I saw this article come out, this earnings today, and this is on United Health and medical cost jump in the third quarter, shares drop. So let's talk about that. Prices going up, inflation, utilization as far as medical costs going up. This hits the insurance companies front and center. United Health, and I'm going to show their graph in just a minute, has been by far the best stock as far as the insurance companies out there. Several have already taken dips earlier this year based on government funding or stars rating, but United drops 10%. Right now the stock is off 10%. What causes this? Why does this matter? So basically they put out the estimates. They think it's going to cost this much, and they were up higher than expected as far as some of its cost and some of its utilization. But when you look at this, more people, older adults, 65 and older, having procedures done. And as far as the government reimbursement for Medicare, that has been less than expected. So when prices go up and more things are done and the government doesn't pay as much, guess who gets caught in the middle? United Health does, Humana does, Elevance does. Anybody that has a Medicare plan gets squeezed in the middle. Medicaid would be another one that would get squeezed. So, how's United done? And I'm going to show you their 5-year graph. And 5-year graph, obviously that is a good looking graph for 5 years. It's up. It's 2.5 times in 5 years, by far the best of the insurance companies. But if I back up and we look at a year to date, still not bad. I mean, it's kind of this big 10% drop today, brings it back to pretty much what it started in January. But, obviously, if we just look at the 5-day graph and we see that big drop of 10%, that's ugly. So anyways, to be expected though, I mean, inflation brings things up, rent and auto insurance. Why would healthcare expenses not go up? Of course they do. So the other thing I wanted to, go ahead.
On that one, click on the year-to-date chart.
Sure.
What really stood out to me is this recent kind of plateau up there of, pricing activity. Mm-hmm. The drop today takes it decidedly below all that recent activity. So it's really kind of a re-rating there and an indication that you're not going to get any pricing support there. But it is a powerful, great company, of course. They've grown like crazy. And sometimes I think, I don't know about you, Mike, but whenever I'm thinking that I've got some expensive healthcare costs and things going on at whatever, I'm like, you know what? If you can't beat them, join them. And I just want to own the stock, right? So I certainly can't beat them. That's for sure.
Yeah, and a lot of times people talk about health insurance companies and, they deny claims and things like that. You'll hear that. But I also think of healthcare companies, because I've worked for some of them, is they negotiate the best rates with hospitals and doctors and drug companies. It's almost like a Costco where they negotiate and get the best rate, which maybe you don't appreciate as much that the insurance company does. Okay, the other thing I wanted to show you today, and I'm going to zoom in. This comes from First Trust. It just came out this morning, but I said, wow, this looks so interesting. And what this shows you is the top holdings of the S&P 500 10 years ago versus call it today, or at least in the last couple of weeks. So, you know, and you know, a lot of times people say invest in the S&P 500 and just go with it. But how do you do better than the S&P 500? Well, you overweight the positions that have the best returns. That would be how you would do it. So when you look at what has grown, and I'm zooming in as much as I can here, since 10 years ago, the number one percentage-wise was Apple. Wow. And it's still the number one position. But look it's doubled. It's more than doubled as far as that percentage. It went from 3.42% up to 7.27%. So basically it's doubled as far as the percentage held within the S&P 500. So that means, guess what? Apple's been a very good investment, and that's obviously one of the core holdings we have in with our models. Now, another stock that is in there is Microsoft, and if you look at it, it's tripled. It went from 2.1% up to 6.5, so it's tripled. And Alphabet 1.8, and it is up to 3.64, so that's a double. All three of those are core positions that we have, and they've done well. But what I want to look at too is what's dropped out of the top 10. It's still within the S&P 500. I think all of these are, but what has dropped out? So ExxonMobil was the second biggest holding, not even in the top 10 anymore. Johnson & Johnson, and I'm sure Johnson & Johnson's in the top 40, probably the top 20, but GE, now there's one that was big that they splintered into three companies, and maybe if you total them, they're up there in the top 20 or top 30. Berkshire Hathaway still in there. Wells Fargo, so there's a big bank, and they had good earnings out a few days ago. Procter & Gamble, great company, and Chevron. So you see two oil companies that were in the top 10, but no longer. So when you look at the top 10 now, how many of these are tech? Wow. So, you know, NVIDIA went from who knows where it was to now it's number 3, probably number 2. Amazon in there, Meta, the old Facebook, Broadcom, Tesla, if you want to call that tech company, you know, somewhat technical, somewhat automotive. The only two that are not really true tech companies, Eli Lilly, obviously the drug company, and Berkshire Hathaway is a holding company. I know they hold a large percentage of Apple, so they do hold some tech, but they're a little mixed. So you can see tech. And off to the right, these are the forward PEs. And if you look at the top right, you know, from 10 years ago, it's kind of level for all positions. You know, you can see that graph, it's kind of flat. And not the orange line, but the actual columns. But when you look at the bottom right, you can see that 1 through 10 forward PE, they're expecting a lot from, which means they are expensive. And I'll go back and I saw this up here. I like how this said. They said instead of saying that it is, how do they say it? Overweight. Oh, here it is. Instead of saying it's very top heavy, they prefer to think of it as bottom light. So it's a new way of saying it. It's top heavy for sure. There's definitely top heavy with the top 10 positions, but the belief is that these bottom positions can come up and make them more competitive. But since I mentioned two oil companies, this is a good time to transition to oil. So turn it over to Corey.
Yeah, and oil has, in comparison to the rest of the S&P 500, I think it only makes up about 3% of the S&P 500 these days. So it's pretty small weighting there. Okay, real quick in the so kind of the geopolitical landscape, oil landscape right now. This morning, crude oil futures fell more than 5%. As Israel is not expected to strike Iran's oil industry. So just wanted to look at this on a chart. It is a big move. 5% is a big move, you know, for any asset in a one-day time frame. But where does that take us? You know, in the last week, we've really moved down close to 10% here in the commodity. And but let's look on a 1 month, or let's look at it for the year. For
Yeah.
the year, we're at the lower end of where oil's traded at this year. Maybe in a little bit of an uptrend here. So, where do we go? We don't know, but what does this mean when you see this 5-day 10% move down? What that really means is that it's a deflationary pressure in our economy, and that benefits many different industries, many different companies in the economy, and of course consumers as well. So these things do operate on a bit of a lag, but it's good to know that we're not seeing inflationary pressure for this part of our life, and this part of our economy. So just a quick note about that.
Yeah, so gas prices go down. I should run out and fill up my wife's V8 engine, get that thing filled up before they go back up again, and save 10% on my gas, right? Is that right?
Hey, well, I mean, it's a lot, come on, it's not getting all to us, Mike. You know that.
What would ever happen if Tesla took over the world with all their EVs and we no longer had a combustion engine and oil was not required? Like we wouldn't even know what to do. No one would care about oil anymore, right?
Well, yeah, not from their perspective, but it would still be behind the scenes. It would be
How
there.
how far can we be away from an electric plane instead of the combustion plane? I mean, would anybody want to fly that and be like, well, I'm sorry, your charge is almost out. Go ahead and glide
We
in.
need to email that to SpaceX. I'm sure they'll give it a go.
Okay. Well, thanks everybody. We will continue with more information this week. I know Netflix comes out with their earnings after the bell Thursday, so that'll be the big exciting one I see coming up, and I'm sure we'll have a bunch next week. So thank you all. Have a great one. Bye.